Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, Philippine inflation for February comes in at 2.4%, faster than January's 1.7%, and marks the second month in a row inflation hit the Bangko Central's 2 to 4% target. The result, though, still has yet to reflect the impact of escalating oil prices, now at 8-month highs, due to the Middle East conflict. From the Philippine Statistics Authority in Quezon City, where the media briefing is taking place, we have the latest on the inflation results on the ground from our mobile journalist, Amy Atienza. For context and analysis, June Neri, lead economist at BPI, joining us live. Philippine stocks fall to fresh one-month lows and the peso sinks closer to 59 to the dollar. And in South Korea, the Kospi reports an historic 12% drop and the Korean won at a 17-year low. And Meralco looks to review its fuel mix as the Middle East tension risks higher electricity costs. The Philippine Statistics Authority has just announced headline inflation in February ticked up to 2.4%. For more details, we have our mobile journalist, Amy Atienza, joining us live from the PSA headquarters. Amy, good morning. Just bring us up to speed on the data. We'll bring Amy back soon as we get her transmission back online. But first, the Middle East conflict continues to weigh on the Philippine peso. The local unit weakened on Wednesday by 13.5 centavos to settle at 58.57 to the dollar, its weakest finish since February 6. The peso opens this Thursday stronger, 58.40 against the greenback. Traders say the impact of the Middle East tensions to oil prices is dragging market sentiment, weighing on the peso. Mike Ricafort of RCBC adds that the dollar remains strong as rising fuel prices heightened inflation expectations and reduced bets for a rate cut. Analysts see the peso trading today between 58.30 and 58.70 to the dollar. Our guest today had forecast February inflation to come in at 3% at the top end of the business world's recent poll of 17 analysts. The actual result came in at 2.4%. Let's see what he thinks. Please welcome BPI lead economist June Neri joining us live. Welcome back to the program, June. Good to see you.
Hello, Cathy.
All right, so you surprised?
Yes, it's a positive surprise, Cathy. As you can see, it's a lot lower than our estimate. A lot lower than the BSP's 2.7% estimate too, no?
Where do you think you underestimated the impact?
Yeah, we were correct about rice, Cathy. There was a 0.4% increase month on month, and since it has a big weight in the CPI, we thought the increases were going to be more significant. It's probably because I don't buy vegetables, Cathy. I missed the vegetables prices. They had actually gone down. So maybe I should change my diet into more vegetables, less rice.
Yeah, why not? And it will be healthier, I guess. But
That's
you know,
right.
June, it does not reflect just yet the impact of the Middle East escalations, 2.4%, with the higher oil that we've been seeing over the past 48 hours, compounding the already elevated rice-driven inflation. How quickly do you expect the oil shock to show up in the CPI basket? And which components do you think, transport, power, food, are most at risk of the second round effects?
Yes, the immediate impact will be on petroleum prices and transport costs, Cathy. And it will probably reflect again this coming Tuesday as both the peso weakened and the oil prices continue to go up. I think it's approaching now the $80 level for WTI and around 83 for Brent. No? So again, if the US benchmark approaches 80, that would probably mean a persistent increase in pump prices for months to come. No?
Which also brings us to that gap between today's result and that which will come next month when that encompasses the full impact of the escalations. How big a gap might that be in percentage terms with global oil now at 8-month highs?
It depends on whether the war is going to be, or the conflict is going to be protracted, Kathy. In last year's episode, we only had a 2-week event that led to the containment of oil prices. This time around, it's a little bit more complicated because the leader was killed, no, and there's now a power struggle within Iran that could lead to again an extended conflict, no. Aside from that, Kathy, there's the risk that there could be some repatriation of our overseas workers, given that neighboring countries were actually attacked by Iran. This was not the case same time last year. So if this holds for more than a month, maybe even 2 months, there could be already second round effects to food and other items in the CPI that are affected by oil.
So if we take your 4% scenario, do you think that is a near certainty now or a foregone conclusion? Or do you think that's going to show up as the best case of the scenarios you've driven?
It looks like it can still fall below 4%, Kathy. Remember that prior to this conflict, oil prices were actually relatively low historically. You know? Last year, oil prices were very manageable. And it looks like there's really a lot of production that's taken place. No? So if suddenly there's a sudden stop in the conflict, that could lead to a very sharp decline in oil prices and allow the second half inflation numbers to stay within the BSP target. Now, but if it's a protracted event and if our OFWs are forced to go home because the friends of the West in the Middle East are also being threatened by conflict, then that could have a more enduring effect on inflation and not only stop the BSP from cutting rates, maybe consider a very small probability of a hike later this year.
Right. So how much of the recent oil move do you think over the past couple of hours is just pure risk premium versus what is actual physical supply disruption, especially with the challenges faced along the Strait of Hormuz?
Yeah, there have been some disruptions recorded, Kathy. Some ships were being harassed by some allegedly are Iranian forces. No? So as long as this continues, then there could be some supply issues that, of course, our own oil producers are watching closely. So if that's the case, then very hard to see a scenario where oil prices could be normalized to the pre-conflict levels. Again, this seems to be more like a protracted development. The conflict isn't exactly what it was like back in 2025. So if that's the case, even if the strait is not fully blocked, the fact that supply is going to be uncertain in many other sources of oil, not just Iran, then we could see a persistence of the $75 to $80 level for WTI crude.
Right, and all that risk is showing up in the peso. I mean, the peso is weakened to near 1-month lows, and local equities have fallen to fresh 1-month lows as well. I'm wondering how you're thinking the governor will assess his options. You made a comment earlier that the rate cuts may be done for how long?
Yes, of course. Growth is a major concern of the Bangko Sentral, and that was probably one of the triggers for their last 2 cuts. No? With this scenario in the Middle East, growth could even be threatened further because instead of the budget going to education and other agencies and government, some of them might have to go to fuel subsidies instead, Kathy. So again, the ability to improve the quality of government spending could be affected by this conflict. No? And then, but of course, BSP's main mandate is inflation, Cathy, and so that if growth continues, even if growth continues to underperform, if inflation becomes not well anchored, no, if expectations are fueled by this conflict, then they will have to stop cutting rates, even if the growth of the economy is disappointing.
Yeah, a lot more questions and answers now, even more so. Thank you so much for your insights, June Neri of BPI. And at top of the hour, the Philippine Statistics Authority had announced headline inflation in February ticked up to 2.4%. Let's try to get back our mobile journalist, Amy Atienza, reporting live from the PSA headquarters. So what's the latest now, Amy?
Cathy, as reported, the Philippine Statistics Authority announced that there is a 2.4% inflation rate for February 2026. This is 0.4% higher than the recorded January 2026 inflation, and also 0.3% higher than the February 2025 inflation rate. The main drivers for this, Cathy, first is the food and non-alcoholic beverages, which recorded a 1.8% inflation rate, and this includes the cereal products, vegetables, and fish and other seafood. And other main drivers include housing, water, electricity, gas, and other fuels, which we saw last month was also one of the main drivers for this acceleration. And also the restaurant and accommodation services is also seen as one of the main drivers of this inflation rate. So last month, if you remember, Cathy, this restaurant and accommodation services, one big effect of this is the prices on carinderias, or like the stores outside where Filipinos usually buy food. And we actually saw that there was also still an increase in that aspect. And we're still looking into the effects of this because as according to USEC MAPA, there is also the impact of the prices in electricity and even in the prices of the raw ingredients in the meat, which affect this increase in the restaurant and accommodation services. But that's all for now. Let's look into the impact and the possible effect also of Middle East. What would be the forecast of the PSA when it comes to this phenomenon into the prices and the inflation rate of the country for next month?
Yeah, and that doesn't even include the impact of higher oil from next week. Thank you so much for joining us, mobile journalist Amy Atienza, reporting live from the PSA headquarters. President Marcos will certify as urgent bills granting him powers to lower fuel excise taxes during national or global emergencies. One senator, however, warns that the country may stand to lose billions in revenues. Palace Press Officer Claire Castro said yesterday it is timely to certify measures mitigating the impact of the Middle East conflict. Castro clarified that the automatic suspension of excise taxes under the train law only covered the period from 2018 to 2020. Speaking on the big story last night, Senator Win Gatchalian said reducing excise taxes should only be the government's last resort.
Well, the total collection of excise tax is about 300 billion a year, half of which come from petroleum, about 159 billion. So it's a very hefty amount. It's a big amount, and that's why the suspension of the excise tax should be the last resort. We should use the other mechanisms such as the Pantawid Pasada, the other subsidies, so that those subsidies are targeted and the intended beneficiaries will feel them right away.
The president may also consider the proposal to shorten the work week from 5 days to 4 days. Castro said, however, it is not yet tackled for now. The Interagency Energy Efficiency and Conservation Committee has reminded all government offices to attain at least 10% of energy savings under the Government Energy Management Program. Among the energy-saving measures include setting air cons above 24 degrees Celsius, adopting flexible work arrangements, and turning off computers and lights during lunch breaks. All of these efforts come as local pump prices may reach 90 pesos per liter, similar to what happened 4 years ago.
Again, we can only look back at our experience ng kaparehong sitwasyon. So, hindi humalayo na mag-i-increase. Nakita na natin nga yun nung June 2022 na yun ang medyo mataas peak price yun ng epekto ng March na simulang gulo doon sa Ukraine and Russia.
Benchmark Brent crude is now trading at $82.58 per barrel, up 1.45%, while West Texas Intermediate is trading at $75.71 per barrel, up 1.41%. Meralco says it is reviewing its fuel mix amid rising tensions in the Middle East that could push global energy prices higher. Chairman and CEO Manuel V. Pangilinan said the power distributor is looking at its use of liquefied natural gas, coal, and diesel to help manage possible price volatility and ensure stable power supply. According to Meralco, any disruption in global oil markets could also drive up coal and natural gas prices, which make up most of the company's power sources. For now, the company's March electricity rates will not be affected, but any impact from the Middle East conflict could be felt as early as April, depending on how long the tensions continue. Pangilinan urged consumers to be mindful of their electricity use to help maintain adequate power in the coming weeks, especially as imported fuel supplies are affected by the ongoing conflicts. You're watching Money Talks. Coming right up. Grab defends its microloan program after a report said interest rates could reach 230%. And all-out support for Filipinos in the Middle East and their families back here. We'll catch up with Edith Gomez-Cudiamat, Chief Operating Officer of PLDT Global in Barcelona. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Let's check in on the markets. U.S. stock futures little changed as major averages closed higher in the previous session, indicating easing fears over the Mideast conflict. The Nasdaq rises by 1/3%. S&P 500 climbs 0.2%, and the Dow advances less than 0.1%. Asian markets are staging a sharp rebound this Thursday, with South Korea's Kospi skyrocketing by 11.3%. Japan's Nikkei 225 rises 4%, and Australia's ASX 200 advances by nearly 0.5%. U.S. equities recovered yesterday after a recent run-up when oil prices paused. The Nasdaq gained over 1.25%, and the S&P advanced over 0.75%. The Dow increased by nearly 0.5%. Asian equities extended their losses this Wednesday, with South Korea's Kospi posting its biggest drop in its 46-year history. The Kospi sank by over 12%, wiping out over $550 billion in market value. The conflict also set the won to a 17-year low, hitting a major psychological barrier of 1,500 won per dollar. South Korea is the world's fourth largest buyer of oil, with 70% of its purchases coming from the Middle East. Japan's Nikkei 225 tumbled by over 3.6%. Australia's ASX 200 and Hong Kong's Hang Seng slid by about 2% each. U.S. 10-year Treasury yields ticked up to 4.081%. As for gold prices, they settled to $5,120 per ounce. And a quick check on our own markets. PSEI opening this Thursday higher by over 0.25%, 6,325. The stock market took another dive yesterday, down by over 2%, amid growing concerns over tensions in the Middle East. The broader all-shares index retreated by over 2% as well, with the sectoral gauges all in the red. As for the Philippine peso, it opens today stronger, 58.40 to the dollar. The peso dropped yesterday by 13.5 centavos to settle at 58.57 against the greenback. And the 10-year government bond yields ticked up to 6.188%. And here are some of the corporate developments making headlines this Thursday. Jollibee Foods Corporation is eyeing a stock market debut for its Vietnamese coffee brand, Highlands Coffee. The fast food giant said its subsidiary is evaluating a standalone initial public offering in its home market by the first quarter of 2027, aimed at unlocking shareholder value and funding its next phase of expansion across Southeast Asia. Meanwhile, Asian Terminals Incorporated nears its exit to the Philippine Stock Exchange. This after it acquired enough public shares together with Maharlika Investment Corporation to cross the 95% ownership threshold required for delisting. ADI is scheduled to delist from the local bourse on April 3 as it transitions into a private company. And Digido Finance Corporation says it has complied with the SEC order to halt its financing operations while moving to contest the ruling. The company told Business World it has suspended loan issuance and filed a motion for reconsideration. The SEC earlier ordered Digido to permanently cease operations and pay a 600,000 peso fine after finding it continued lending despite its license revocation. Grab is defending its microloan program after a report said some riders face effective interest rates above 230%. Grab Financial Group Philippines said the loans were designed to give driver and delivery partners a safer and more transparent alternative to informal lenders, with a total repayment amount and schedule disclosed upfront and no hidden fees or late payment penalties. The company added daily repayments are structured to match riders' earn-as-you-go income, making payments more manageable. The response comes after a Nikkei Asia report found that some short-term loans offered through the Grab app to riders and motorcycle operators could reach effective annual interest rates above 230% due to daily deductions from their app wallets. And the Philippines telecommunications providers are rolling out free calls, data, and other support for Filipinos in parts of the Middle East as tensions escalate in the region. With us for more, PLDT Global's Chief Operating Officer, Edith Gomez Kudiamat, live from Barcelona. Good seeing you again, Edith. Welcome back to the program.
Hi, Cathy. Good seeing you. Good morning, everyone.
All right, to get us up to speed on the offer of free calls, data, and support as the conflict continues in the Middle East. I mean, PLDT and Smart have done this in previous moments when we had these tensions. But what makes this round different?
All right. In response with the ongoing tensions in parts of the Middle East, PLDT Global activated an OFW support initiative to help Filipinos in the affected regions to stay connected to their families and access assistance when needed. So through the Smart Virtual Number in the Tinbo app, our fellow Filipinos in Iran, Iraq, Israel, Bahrain, Kuwait, Oman, Qatar, the UAE, and the Saudi Arabia can make free calls to the Philippines to any Philippine mobile or landline number, including PLDT, Smart, TNT, and other networks.
So
just as importantly,
consider this to be the biggest by far, extended
It
to
is.
our OFWs in the Middle East?
It is actually, and also the families in the Philippines from PLDT and Smart, they can also make free calls to the countries that I have mentioned.
Yeah, in the 48 hours you've started offering that service, could you give us some color? I mean, what's been the rate of use so far of calls being made from the Middle East to the Philippines and those from here to the Middle East?
Okay, inbound calls from the regions here outside to the Philippines, we are monitoring about 2 to 3 calls per OFWs. We've been tracking more than 300 calls from the outside to the inside, and we're expecting more calls from the Philippines into the Middle East countries.
Yeah,
That is within the first 48 hours of launching the service.
Right, but as we've seen, the drone strikes, it could hit any infrastructure since the conflict began. Has it been difficult to connect people at this point? And what are you doing as a workaround?
Okay. Right now, what we've been seeing is that there's no glitches being experienced by our OFWs. All calls are terminating 100%. But if the situation arises, we are ready and we are prepared to extend this support with our OFWs. If need be, we will reach with our carrier partners here outside to be able to extend the support as needed.
Right, and it helps that you have the Tinbo app. That is the digital app layer that carries many of those free calls. What's been the usage so far on that particular app?
Okay, so for Tinbo usage, as mentioned, we are experiencing 2 to 3 calls per user per day. So they are doing short calls to the Philippines to be able to update their family members about their situations. So the free calls is actually limitless to our OFWs from the time that it has been launched until to the March 15. But we are ready to extend the date as needed.
And as needed would mean when? Because as I understand, it's March 7th for calls from here to the Middle East and March 15th for those calls coming from the Middle East.
Yes. So it is right now based on those dates, but we are ready to extend the date as needed.
All right. And the collaboration you have with the government agencies, DMW and OWA, how many of those calls get to these agencies for support for our OFWs?
Actually, right now we're seeing a lot of calls into the DMW 1348 hotline. The service is actually not only available during this period. We have activated these free calls 24/7 to our OFW since the start and the launch of the service. But recently, we've been observing increase of traffic into this OFW 1348 hotline.
And that indeed will also be extended along with the free calls, if indeed you find that this will be necessary. All right. Well, thank you so much for the update, Edith. Safe travels back to Manila. Edith Gomez Kudiamat, the COO of PLDT Global. And before we go, Disney Cruise Line has officially christened its newest ship, Disney Adventure. And guess where that is? The vessel is Disney's 8th and largest cruise ship and the first ever to sail in Southeast Asia. It sets off on its maiden voyage on March 10, followed by a series of 3 and 4 night sailings. Hollywood actor Robert Downey Jr. led the christening ceremony as the ship's official godparent. Guests were also treated to performances by Filipino singer Jed Madela and Australian-Korean singer Dami Im, celebrating iconic Disney music. Disney also gave a sneak peek at the ship's 7 themed areas, including Town Square, Wayfinder Bay, and Disney Imagination Garden. And all that happened in Singapore. That's it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. Kapatid, we are One News, all sides, all the time. Have a great day ahead.